And the economic data for CPI just came out, and it looks like strong move upward for at least the euro. So we got that means dollar weak. That means CPI came through lower than usual, I think. Let's take a look. Take a quick look. We're going to be off to a quick start today. We'll go over all the introductions later. Just remember that anything we say during this podcast is going to be all for entertainment and educational purposes, not investment advice. Please contact your licensed investment advisor before risking your capital in markets, because you can lose your money, and our opinions are only our own and nobody else's. Okay, so take a quick look at the data. 6:30 a.m. month-over-month CPI came lower than expected on year-over-year, lower than expected on month-over-month, and the core CPI, which excludes food and energy, came in as expected. So whether the data is real or not, right? The data is telling us and telling the market that inflation is dropping a bit. It's coming in lower than expected, meaning that the Fed hikes have worked. So because of this data, there's a good chance there will be a Fed pause, or as some are calling it, a Fed skip tomorrow. Okay. So, for those who are new, and this is the beginner course on YouTube. And of course, we are also broadcasting this to our private group over in Telegram. Let's see if any. Oh yeah, we got Valgal. I think that's Valgal VM over in the YouTube, also known as Valgal in the Telegram chat, if I remember that properly. Let's see here if we got people in there talking. Valley Girl, maybe that's what it is. So either way, hello, good to have you on. Thanks for joining us over on YouTube as well. I'm going to go ahead and spread the YouTube link. Give us just a moment to do that. I got Ray talking to us. Let me see here. Yeah, Ray, go ahead and talk to us in the main room. I appreciate the private message, but that's good information for everybody to see. So Ray, go ahead and put that in the main Algo Factory lab so we can all talk about it together. Let me see here. And I'm going to take a moment and send the show link over here. Give me just a moment. Got our nice chill hop music going on. Everybody likes that, right? Gigi is typing now, and Gigi, you just saw the whales do their thing. So that was a lot of money on the sidelines waiting for the CPI data and then coming back in. And for the markets to move that much, chances are that was not retail. Retail is us, the guppies, the minnows, the faithful, right? So chances are that big move came from the big money, which is going to be whale action coming into the market, and that's fine. That's what we expect. And again, there's a decent chance, and I can't speak for what's really going on in the background. So that's I can't say for sure that the whales are just kind of messing around and finding ways to push price around into other people's stops and do stop runs, but that's pretty widely accepted by the trading community that is what's going on. Okay, so we don't know what's happening, but we're pretty sure that's what's happening, and those who have the higher level data that I imagine the Bloomberg terminal is putting out are able to confirm that. I'm not talking to any Bloomberg terminal types right now, so I guess I could make a phone call or two, but pretty sure that's what's going on. Again, that's just my opinion, educational purposes. So remember, today we'll just discuss for the moment the landscape when it comes to the economic data. I know this has been kind of a theme lately, but today is really an example of how this affects the market, right? So last night I was in a couple trades. I took a trade quietly on the side, and it looked pretty much like this. I didn't really announce this trade, but because it was more of like a day trade, and I generally don't announce those, but it was a nice win. I took my algo said I could enter right about here, and let me make sure that's on the screen, and let me make sure that that's actually blown up so everybody can see it. Okay. So I took this trade that was inside the range because my algo said I could. And, inside the range trades are a bit risky. You want to wait till it breaks out. And it certainly broke out. And I took another trade at that time. And that one I took more publicly. But this was a nice trade that I took right here. Very nice trade. No, it wasn't that good. I didn't get that kind of return. I think it was more like, I think my stop was like down here. No. It was like it was like this is what the trade looks like last night. Something like this. So I got a nice, basically 1.5 to 1 inside the range. I give myself a lot of space because there wasn't a whole lot of volatility, right? So I give myself a lot of space for price to head down. Okay. That I quietly won, but as I did that, I was set up for either a breakout to top side or bottom side. So the range is where price is kind of bouncing around in an area, right? So price is making this kind of, it's stopping at one point up high, stops at one point down low, up high. So it's not getting out of this area. And when you're inside of a range, you can trade that range. You generally are going to want to see price bouncing off the top or the bottom of that range. You can do like a midline trade where, you find the middle of that range. And, for me, there has to be an algorithmic aspect to it. But once price breaks that, there are potential entries. And that's essentially what I did last night. It's not the safest of trades, but it also was a pretty small entry. Again, I didn't really announce that per se because I'm still working on that algorithm. It's not an algorithm that I have completely tested, so I took a small position and won it, but that's, on something I'm testing, I'm not going to really announce that. But that's how that trade went, and that's kind of nice. But I did look for an opportunity, and I saw some other traders out there kind of doing the same thing, so which kind of confirmed it, where they looked for price to break out of the range. And it was a perfectly fine trade. I didn't win, I didn't lose. I actually took like a super risky trade that was like it would have been a super high, like 7 to 1 risk to reward ratio last night. And it was a good trade. It just stopped out. So that one was the first trade, and I took that publicly. And let me adjust that. I wish I had a 47 to 1 risk to reward ratio. That'd be sick. But it was more like this. It was more like that. So basically, there was a quick pullback on a low time frame. So price broke above the structure, broke above right here. And I'm going to zoom in so people can see why I took this trade. Okay. So price broke out. And then this little white doji right there, that was like a little retest. Actually, it was on lower time frame than that, to be honest with you. It was before this move down. So I see. Yeah, this was it. It's just hard to see on this time frame. But there was a little retest, and I'm like, okay, maybe that's it. And it's a super high risk to reward. I don't mind throwing, $100 to make 700 or to lose 100. That's fine. That's, those trades work out for me from, at least half the time. So to lose 100 to possibly make a 7 was fine. I'm not going to put $1,000 on it, not on something that's super high risk like that. But, it did work. The algo pinged. But that didn't work out. And then I went ahead and took more of a standard trade that looked more like this. And I got out right here, right before the data went, right before this big crazy candle from the data. I just got out at no win, no loss about 45 minutes ago. So it wanted to go up. You see these bullish pointers right here. You see these wicks pushing up and price continuing up. That's very bullish price action right there. But the problem is that the economic data is coming out, so there was no follow through. Now, had I stayed in the trade, I would have won or almost won because of course, the data came out. But I don't bet like that. I don't gamble on the economic data going my way. I let the economic data come out, I let the market jitters pass. I look for price to kind of resume a direction, unless the news is huge, which today it really wasn't. The data was just slightly below normal right here. You can see slightly below normal. I mean, the CPI month over month came out to nice, very nice, about half the expected, but the year over year is like just 10 basis points below, so it wasn't a big deal. So by the way, just a quick announcement here. The gorilla will be on. He just has a overseas call that he's finishing, so he says he'll be on before 9 a.m. to come and visit us here at the beginner. And he's usually on like from the beginning of these, but that's what happens when you take a week off. You got a lot of stuff that that happens. You got a lot of catch up to play. So that's just what he's doing. And what he's doing in the background actually helps us out, gets us a lot of good information, especially his Thursday drips that he does in our private group. So that's to understand over at the private group, which let me put their website up here. Here's the actual QR code, so you can use your camera on that if you want to, find us. That's our rate at $49.99. Basically, it's a monthly membership to Algo Factory. And then I will go ahead and put up the website here, www.algofactory.tech, right? So here's the website right there. And what we do over at Algo Factory is we help people who want to learn how to trade. We help people build trading algorithms. And what we did is, oh, wow. Be Good says he made $6,000. He's it's paper trading, but on the EUR/USD trade that I took last night, overnight, the one that kind of went halfway to target, he actually got out at a nice bit of profit, made $6,000 on paper trading. So that's awesome. Be Good, glad to see that. And that's if you're able to be up that early or up that late and take profit on something like that, once you see the momentum falling, if you have an algorithm that allows you to exit like that, then then that's pretty advantageous. So yeah, good on you. But like I was saying, over at algofactory.tech, what we do is we help people learn how to trade. We can work with beginners, experts. This class is kind of aimed at beginners, which is why we let that be out in the public on YouTube. And then, of course, starting at 9 EST, because this starts at 8:30 EST, Monday through Friday. The gorilla's usually here. He just wasn't here today. So that is what that is, or at least not yet. He says he's going to show up before this is over. But anyhow, we do this for the beginners who have questions. How do candlesticks work? What's Forex? What's crypto? Things like that. And then we go ahead and field those questions, or we talk about things like the economic data, how that affects the market, everything you've seen so far. And after 9 o'clock, we go over to our private group and we get into more complex issues. Although sometimes the private group does, want basic issues as well. We have a lot of new traders in there. So the private group is going to kind of dictate what the class is going to be about. And of course, if there is not if there's not a lot going on, then we'll just figure out something to talk about. There's always stuff to talk about. I usually just go through the charts. I'll look at the Forex charts. I'll look at crypto charts, all that kind of stuff. So let's see. For now, I think what I'll do is look for 1.08. Let's go ahead and see if I can find a little trade right now. Let's see. I'm gonna have to go to a lower time frame on this to make sure this is legit, but I think I'm gonna enter here. Pretty much right where price is, right where that line is. And I'm gonna have a stop loss at, let's see, 1.081. 1.081. And I'm going to take profit at 1.0825. Now, this is an economic data trade. Hold on a minute. I hate when that happens. Hold on. I got to redo this. Let's trash this. Go long here. Stop loss at 1.081. Take profit at 1.082. A little risky, but I think once price calms down, I'll be willing to look at something like this. I would actually have to drop to a lower time frame and make sure that what we're seeing is the proper type of. Yeah, see, look at this. This is interesting. So price, had its crazy moment, its jitters, right? But it is continuing upward. So I'm going to take a small trade based on this here, because I only take small trades on these economic data, situations, and I want to see price act a certain way before I even do that. But I'm going to set the trade up. So I'm not entering this trade just yet, but I am setting it up. 1.0825. Yeah, so you can see right now price is actually, it's just figuring out what it's going to do. I don't think it's quite, it wants to continue upwards, but I don't want to just take this trade and have it stop out right away. I want to at least see. Yeah, see, it's still pretty wild. Let's do this. It is a nice 1.6 to 1 trade, though. So it's not the hugest return. Is it stable? Okay. I'll take a small risk on this right now. Okay, so entry was at, this is a little tiny risk, nothing big. We're just kind of let the trade jitters fade and see if we can snake out a quick little profit. And if not, that's fine. I don't care if I lose that trade. But I entered lower than what we're seeing. The risk to reward is actually better. Let's see if I can fix that. The entry is at 1.08139. I fixed that on the screen. We'll see if that works, It may just stop out. That's fine. Taking a quick little trade once the news jitters go away. So this is, just a little trade. It's already getting in a profit now. That's good. It's making money already. This is a quick little day trade. Put my alarms up so that in case we're not looking at the chart, we'll see if it wins or loses. Putting an alert on the bottom. SL. It stops out. Alert on the top. TP in case it takes profit. It's in profit now. It's a beautiful thing. Let's see, 1.08139. Let's see. Actually entered right here. 1.081. So and I didn't do the actual trade station on this screen, but I did take a little trade that you can see right now. So that's good. Get to see me take a live trade. We'll see how that goes. What would be good to ask? Be good to ask a question here. Let's see. Oh, okay, no, that's just a prior comment. So that's what it looks like to, kind of take a trade based on economic data. And the reason I could take that trade is because overnight there was a bit of structure that got created right here. In fact, this red line right there is sort of an automatic structure marker, but I could put the line right there. So I put the stop just below that, a hair below that. I'm not putting a whole lot of money on this. I'm not trying to get rich on this trade, just a little bit of something. And once price, and this is the 5-minute chart here. So, once price kind of broke, it did try to come down here. You see this, let me stretch this out. This big wick came down, and then you had this kind of strong close. So price rallied back up and then even rallied up further. But now you're looking at what could stop out. So let's see if it does. That's it. That's the end of that trade. So I lost basically some pocket change on that. So we'll come back to this though. There's going to be more opportunities on this. So that's just a little, I could take that because of this candle right here, this strong candle. It was a very tight stop, and that was on purpose because otherwise I wouldn't have had enough risk to reward. And it did match what was going on with structure, but it looks like price needs a little more time to figure itself out. So we'll come back to this. Let's see. We got BOE Governor Bailey speaking in 2 hours. So anybody who's involved in the pound is going to, have to watch out. So, he can, once he starts talking, we could see price move pretty violently. So if you're in a pound trade of any kind, especially USD, GBP USD, that's the cable, then you might end up with seeing some violent moves. And then again at the European Open, which is 2 a.m. EST, the Brits talk, they're going to announce what their GDP was. And again, tomorrow morning is, I don't know, to take a trade overnight, it'll just be these kind of little trades that I'm doing that are not worth very much, but it's, a decent way to make some money. Yeah, be good. That's the thing. So this is the, if you're going to trade on these kind of quick trades like that, you got to make them small. You got to make sure that they're small and they have a good risk to reward ratio. I think this one was like a 3-to-1 because I got in lower than I originally intended. Otherwise I just wouldn't have gotten in. But you're paper trading, so that's not going to hurt you. So that's the good part. So again, you guys are, if you're just paper trading, then that's okay. You can, follow my trades just to feel what it's like. But if you are actually trading money, then, and not paper trading, remember, you got to do your own research to make sure that the trade is matching your algorithm and you know what your expectancy is, which we talked about yesterday. So actually we talked about expectancy on the private group yesterday. So that being said, I guess I can help to define expectancy. That'd be a good thing to talk about in this group. So expectancy is a term where you go back in time. Be good. You said that there's still emotion involved. Emotion involved in what? In paper trading? On that one, I beg to differ. If you put, here's what I do for like learning to trade and like, being a new trader. I actually will put like $100 or something very small on an exchange, and I'll trade that because then there's actual emotion involved because there's actually money involved. But if you think there's emotion involved with paper trading, then that's actually probably not the way to think because there's no actual risk. You're not risking real money. So, I think putting a very small amount of money, even $10, just so there's real money at risk, that's where the emotion's involved for sure. But yeah, paper trading is good for just getting the feel for entering an order, to know how that feels, to know how the trade desk works, that kind of stuff. That's where paper trading comes in, and it's pretty good stuff. So, but yeah, so expectancy is a term where you can know what you expect to make on a given trade, and you do that through backtesting. So, like for example, you go back through time, and then you find you find a place where you might take a trade, and then you enter. You're this is a simulation. Obviously, you're going back in time. right? And you can use, like, say, the replay function. So you would, use this little rewind button up here. We have an entire class on how this works over at algofactory.tech. But you can, let's just say that you go back here in time, I should say, and then your algo, whatever that algo is, let's just say it kicks in, and your algo tells you that you can go long right here. So you enter a long position, right? And then you go ahead and here we got the gorilla in the background here, but let me finish this concept here real quick. So you go and you set your trade like that, and you got your long right here, and you can put in whatever amount you want to put in, say 1,000 USD. You're going to risk 1%. That means you're going to risk $100, and then you're going to hit the buy button. You're going to fake it. This one says 20K here, so you get buy. Actually, yeah, so 20K quote-unquote units, right? So then what you're going to do is you just hit play, and you find out what happens to your trade. And see how, if you look here, it's simulating an actual trade. So you see that you actually have like a little P&L, that 360 USD, that's profit and loss. And if you just hit the play button, you'll see how that would have gone for you. Risking $100 or whatever it is, risking 20,000 quote unquote units, then you, at this point, it shows you would have made $90. So in this case, whatever 20,000 units that you risk, you can change that number right here. You can, add, subtract, whatever it is, but you would have made, in this case, $90 by risking about $25, maybe $30. So that's how you, and what you do is you figure out if you're risking the same amount every single time, like say you risk $100, your average win is going to be, let's just say it's $160. Now you might lose some, you're going to lose some, you're going to win some, but your average is like $160. And that number that you're winning is going to be your expectancy. And psychologically, you know that every time you click that button, you're making $160. That's how that works. So we got the gorilla jumping on to give us the grand send-off real quick. Gorilla,
Gabagool.
Gabagool. I sent via a video of my kid saying Gabagool.
Yeah,
it's like
cute,
one.
Man. Gabagool.
Gabagool. I said, what do you want in your sandwich? He said, Gabagool.
That's it, man. And for those that don't know, Gabagool. Next time you're in Chicago or New York, you go into a nice Italian deli, get yourself an Italian combo with some gabagool on there, some hot Calabrian peppers, some fresh mutts. It's game over. Game over.
Yeah.
Anyway, for all you, I am hungry. Just making I'm making myself
about
hungry. It. I know it's amazing. It's too early in the morning to eat.
Yeah, well, says you.
Yeah, yeah, it's true.
Says you. It's earlier for me than it is for you, man. It's like 7 o'clock for me. 9 o'clock ain't too early to eat. What are you talking about?
Yeah.
Pour yourself a bowl of diabetes, aka cinnamon toast crunch.
I love cinnamon toast crunch, man.
Yeah, that was my favorite for a minute.
Yeah, same.
Yeah, cinnamon toast crunch, golden grams. I did like the roof of my mouth to stay intact, so there was no Captain Crunch.
Oh my god, they used to like cut your gums up. You used to have bleeding gums after eating Captain Crunch.
Yeah, bad stuff, dude. Bad stuff.
Oh my god.
Well, we got the Vita to say hello to us here. We're gonna hop over off the YouTubes.
Yep,
so,
everybody on YouTube, listen. If you haven't joined Algo Factory, what the heck are you waiting for? Join, learn, educate, empower. Become a better trader, create that secondary form of income that you need, vitally critical, especially in this day and age. Join us, algofactory.tech. And with that being said, later YouTube, hello, our clientele.